Welcome back to the channel. My name is Harold. Today is Thursday, April 9th, and in today's video, I'm going to be going over how I was able to make $600 day trading ES futures. So coming into our daily plan here, overnight, we attempted to break lower and we failed, right? Opening inside of previous day value areas, right? The day before, we had an insane move to the upside overnight, and then we just consolidated here. So for me, my plan was based off this previous day value area low, which is this level right here. This was my key level of inflection, as I was expecting either the market to dump, retest, and continue down further. I take my entry here, or we attempt to break, we hold, and we complete this run to the other side of fair value, right? Our entry, I was looking to be here. I was mainly looking to take a reversal play, whether we were going long or we were going short. Now we had this huge imbalance form, so it wasn't weird if price wanted to break this level to the downside and fill all of this, right? I call this line the line of least resistance. And pretty much what this is that once this line is broken, there is no resistance here to the downside, and it can easily fill all the way back down. But just because that's an option doesn't mean that it's going to happen. Yesterday, we attempted to break lower, but we couldn't. We attempted to break lower, but we couldn't. We attempted to break lower, but we could not, right? So 3 attempts, we could not, and then we ended up opening inside fair value. So to me, a very big possibility was that because we had fair value here, and then we had an imbalance here, and now we're creating fair value again here, that we might just be chopping around this area, and that was the plan I was willing to play off of. So I took 2 trades today. One trade was break even, and the other trade was for a win of $600. The first trade, just to keep it very simple, I took an entry here at 68.15, and I was targeting somewhere around the 67, I think 6800s. 6800s with my stop above the highs at 68.23. I took this trade because we opened below the previous day POC, and usually I use POC as an information point where if we're trading above POC, it tends to mean that we'll usually fill to the upside. If we're trading below POC, it usually tends to mean that we'll fill back to the downside, right? So I spotted a lot of weakness here on this move up to break the POC. There was weakness. I entered on this break back under, but as I was in the trade, I just realized that I was in a lot of chop. There were so many points of absorption on this chart where sellers were getting absorbed every time we tried to sell off, that in the end, I was just in chop. And yeah, price did end up coming all the way down, almost hitting my TP. But I cut the trade short at around 7 a.m. And I just cut it short because I didn't want to be in the trade anymore. I thought that I could have found a different opportunity, or it just wasn't that type of day. But waiting a little bit longer, I was able to actually take an entry right here at 68.07. The market bounced. The price bounced at our key level, the previous day value area low. And the reason I wanted to take longs here is, number one, usually when the first 30 minutes of market open, even the first hour is choppy and there's not much volume, not much action, no volatility. If price comes to a key level, it tends to reverse. That's just from the backtesting I've done in the past, the analysis I've done. I've just realized that when there is no strength in the market, price tends to reverse. So price was coming to our level, so I was first looking to see, okay, are we going to break down or are we going to reverse, right? We got to look for my confirmations. So I take a trade here at around 68.07. And I target the previous day value area high with my stop below the low of day. This was for about a 1 to 3 RR trade. And as you guys can see, we killed this trade. Like, we ended up squeezing here, which I actually thought would happen, but I reacted way too late. If I had maybe 10 more seconds, I probably would have moved my target up just a little bit more, somewhere around the 36s. And then we just kept running. It's unfortunate that I wasn't able to catch the full move because just until last month, I didn't really have full targets. I kind of just let my trades run. But with the bad price action during March, I kind of just adjusted to have true targets. And then this happens, right? And it's fine. Like, I followed my trade to a T. This was an A plus setup. And we were pretty much in zero drawdown the whole trade, which is amazing. Now, coming into the order flow, this is what my entry looked like right over here. So we were coming down and we broke our level, right? So this is my entry criteria for reversals. We get increased volume, absorption or exhaustion. We clearly see that sellers get absorbed here. A shift in delta. I also need to update this, but I've kind of realized that it's not super important to see the shift in delta, but it's just a good bonus. And then the decrease in volume is for if we're looking at the next candle, right? So off this alone, we couldn't really take it. We do see that there is selling absorption, and we see that buyers are somewhat aggressive here from this little level, right? The next candle, we move lower. We break the key level again. We are unable to close below it. We get a decrease in volume. Like I said, decrease in volume. And we're just seeing aggressive selling, negative 10% delta. We're seeing aggressive selling, but no follow through. Sellers are trying, but they're unable to push. And then the next candle, we get an even more decrease in volume, now showing weakness. Price is unable to close below this level again. And now we see aggressive buying step in here at the lows. This is the 5-minute chart, by the way. So this is what my confirmations were. Coming into the 2-minute chart was pretty much the same thing, right? We get increased volume, aggressive selling. We're met with aggressive buying just right after. Again, aggressive selling. We are unable to close below or break below substantially. We just make these mini tick moves right to the downside. And the next move where we break out of this 3-candle pattern, there's nothing. We get nothing from the sellers, but there's clearly aggression from the sellers, negative 13% delta, negative 13% delta. But we get a decrease in volume here. And again, we see the aggressive buying step in. See the aggressive buying step in. And I end up taking the trade somewhere around this level right here. Somewhere around over here. My break-even point was this level right here, 68.12. If price was able to break above this and hold, which we did right over here on this candle, I was willing to take my trade to break even. And again, if price was able to expand off here, I was willing to move my stop up and up and up until we hit our target. So that is it for the day. That were our trades. So now just going into our TradeZella stats, the first trade, break even, negative $23. That to me, negative 25 to positive 25 is pretty much break even just because I'm trading 5 micros. That's going to be 1 point's worth for our 5 contracts, $25. So I keep that as a break even point if I'm able to get below 1 point. We had an initial target of $512, planned R multiple of 2.73. We were in the trade for about 12 minutes. And yeah, so that was it for this trade. Next trade, $613. Planned R multiple of 3.41. We were in the trade for about 50 minutes, so it was a pretty long trade, but it was very, very worth it to see it through. And I was definitely keeping my stops a little bit wider on this trade. But yeah, if you guys have been following along, I have not been taking many trades. In the past week, I've taken one trade. Here, let's go in here. Right. In the past week, I've taken two trades, four trades total this month. And it's about to be the end of the second week of the month, right? We're up around $255 on the month, 33% win rate. Average win to loss is 3.66. I'm just trying to take things slow, but at times, like, I even felt myself getting very frustrated today. Like, it's just too slow. And I woke up this morning and mentally, I really want to take a trade. And I think that's why I ended up taking that first trade at POC when I normally don't take a trade at POC. Usually POC is just, it's a level of information for me more than a key level to trade off of. But I think I just created something in my mind and I ended up taking the trade. It's sad to say, but there just hasn't been many opportunities in the market for me to take advantage of. And there's been a lot of days where I just come on here and make my plan and I just don't get to take a trade. Sometimes I'll hop on in the morning, I'll see the market and I'll be like, damn, I'm probably not even going to be able to take a trade today. Like, I'll know even before I make that plan, just because how far price is from certain key levels that I'm looking at. But I'm learning. I'm learning that this is just the essence of trading, right? I thought I fully understood that back then, but I think as I'm repeating and I'm trying to be more and more patient with myself, with my trading process, I'm just learning it even more. I'm being reminded about it even more. As much as I want to take a lot of trades to feel productive, this in itself is a very, very good thing for me and my mindset. And I've been able to kind of just carry on every day, realizing how boring trading is. Like, sometimes I'm just here and I don't use my phone when I trade, or I try not to. Like, for the first hour, hour and a half, like, I put my phone on my bed and I don't look at my phone. So I'm just straight looking at the charts. But like I said, sometimes I'll hop on and I already know that I'm not taking a trade today and I'm still just looking at the charts and it gets boring. But if that's what trading is and that's what's going to make me successful, then I'm all for it. And yeah, so that's it for the day. I hope you guys enjoyed the video and I'll see you guys next time. Peace.